Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today is the 30th of September 2019, so welcome everyone. Welcome to this Monday's afternoon session. Welcome to this last trading session for September of 2019. As always, before we jump into the charts, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also, just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which you can always also check out on a daily basis, and I believe you can find a lot of useful material here, different analysis that we do on a daily basis, so yep, feel free to visit us on jfdbank.com. Okay, now then, first of all, I wanted to touch on the Dow Jones Industrial Average here. So, looking at this picture here, last week the index still managed to close above this 26,720 zone that I talked about previously in one of my videos last week. So, well, what I was saying that we needed to see a nice good close below the 26,720 zone before we could examine further declines. Excuse me. So the index closed here, and looking at the cash index right now, we can see that it's currently balancing around the same level where it ended the week last week. So basically, still the same game plan remains in order for us to consider further declines. Ideally, we would like to see a drop below the 26,720 zone, and to be honest, even more ideally, if I can put it that way, we would need to see a nice good daily close below this level before we could examine the next potential target here, and this is, by the way, a 4-hour chart. So in a way, how you could play this one out is if we see a drop and we see, let's say, a 4-hour candle closing below this 26,720 zone, of course it increases the chances for a further move lower. But if of course if a daily candle closes below this, then yep, we will it will support the downside even more. So looking at this 4-hour chart here, if we see that move, then the next target for us, then the next potential area of support could be seen around the 26,415 zone, approximately around there, and that also coincides here with the 200 EMA on the 4-hour chart. So don't get confused, that's not a daily chart. So that's why, guys, for now, keep your eyes on this one. Also, what I wanted to kind of show you from the very short-term perspective is, and we previously had this upside line here, but that got violated. So now what we're going to do here is we're going to draw this downside resistance line, a bit of a tentative one, but nevertheless, we're going to keep an eye on it. So, and currently you can see what's happening here. We're having a nice well, kind of a descending triangle formation here. I mean, it's a bit of a not a clear one because we do have some space here, but still, for now, the price structure is with lower highs, and but it's struggling to drop below this area of support. So that's why for us, in order to consider further declines, we need to see a drop below this 26,720 zone, or ideally a close below that, before we could examine these lower levels. Of course, we will aim for the 200 EMA here on the 4-hour chart near the 26,415 zone, but if that fails, then yep, another good possible area of support could be seen around the 26,040, or in a way, just you could round up towards that 26,000 level. So, but for now, let's go step by step. First, let's see if it actually wants to drop here. If it reverses here to the upside and breaks this downside line and pushes above the 27,000 level again and closes the day above it, then, well, I mean, it increases the chances for this one to move back up here towards the 27,306 or 10 zone, approximately around there. But of course, slightly above that, we do have the all-time high near the 27,399 zone. So keep your eyes on this one. Gold. Very quick mentioning of gold. I've looked at this one last week, and this is what I kept talking about. So last time when we looked at gold, and we were already kind of trading around here, already below this upside support line taken from the low of May. Let me just quickly double check that. That's the low of the 30th of May. So last time, yes, it was already below there, but we were still hanging around above its 200 EMA. Now, what I was saying, guys, for us to consider further declines, we would need to see a drop below the 1498 zone, which we managed to get. You can see that the commodity drifted lower. Almost tested our other key important support zone near the 1484, then reversed back to the upside, failed to kind of stay above, not only above the 200 EMA here on the 4-hour chart, but also above the 1498, 1499, roughly around there, and then sold off again. And now this is the picture that we're getting. So the commodity, the precious metal, is breaking now the 1484 zone. This is what I was talking about. So basically, if we see a close below the 1484, this increases the chances for this one to drift further down. And we could then initially target the 1475 zone, but if that fails, then yep, the next potential target could be around the 1456 or 1453 area. So this potential support zone could play out nicely, but again, as I said, we need to see a nice good daily close below this 1484 first before we could examine further declines. In terms of the upside, well, it's a bit of a tricky one. So in a way, first of all, actually, let's get rid of this upside line because this is no longer valid. And what we're going to do here and what we're going to monitor is this, not only the psychological 1500 level, and let me just probably shift this one right now here. So we're going to keep an eye on this 1500 level because it coincides with the 200 EMA, currently coincides with the 200 EMA on the 4-hour chart. But just for that extra confirmation of the upside, ideally we would like to see a push above the 1512 zone here and only then aim for higher levels again. So for now, this is looking more bearish than bullish. So guys, be very careful on this one. Keep your eyes on it, and let's see how this is going to play out. NZDUSD, I've talked about this one this morning, and if you watched my Traders Espresso, basically I was telling you to keep an eye on this 0.6250 zone. So it managed to hold the rate from kind of closing, even closing a 4-hour candle below it. Of course, don't get me wrong, we could get some more activity going into tonight. Be very careful with this one. Overall, it continues to trade below a downside resistance line taken from the high of the 22nd of July. The only thing is that don't forget that this downside line is a bit of a tentative one. So in a way, it's just for kind of a reference here. So for now, we're not going to focus on it too much. We're going to focus mainly on our key areas of support and resistance. Now, ideally for us to, let's say, examine the upside again, well, we would really like to see a push back above this level right here, this 0.6362. Now, don't get me wrong, I do understand it's quite a big of a move here to miss out. So in a way, from the short-term perspective, how you could play this one out is potentially if we see a push above this level right here, and actually, let me just double check very quickly. If we see a push, yep, that will be this one, just for that extra precaution. So a push above the 0.6310 zone could in a way open the path towards slightly higher levels. The only thing is that, of course, we'll be very careful near this downside line. But as we said, given that this downside line is a bit of a tentative one, that's why we're not going to focus on it too much. If we get a push above the 0.6310, of course, this increases the chances of a further move higher, but it will keep an eye on some of these other key areas of resistance, like for example this one right here near the 0.6327 zone, approximately around there, and that's the high of the 26th of September. Again, like I said, if that gets a break, then yep, we will aim for higher levels. But again, as I've mentioned this morning, Still, given the fact that we're not far from this key area of support near the 0.6250-51 zone, well, it would be wrong to kind of avoid this. I mean, even though we already had a nice rebound from it to the upside, but we have seen these happening many times where, especially in the euro dollar, which I will get to very soon, where we could see a nice rebound, and then if it gets a hold up around here somewhere. And by the way, a good holdup could occur somewhere near the 0.6280 zone, because let's say by the time this decides to travel higher, it may test also the 21 EMA here, and if both of these hold it down, then we could see this one curving up and curving down curving back down here and dropping again towards the 0.6251 zone. So for those who are more on the cautious side, in a way, how you could play this one out, you could in a way wait this one and wait here and wait until this decides to reverse back to the downside. If it decides to reverse back to the downside, wait for a drop below the 0.6250 and then aim for lower levels. There are some good obstacles underneath, and let me just quickly show you what I'm talking about. So for this one, I would need to jump into a daily chart. So one of the levels that we're going to be targeting here will be this 0.61, and let me just zoom back into history here, guys, a little bit. This 0. There we go. That's what I'm talking about. So this lowest point of 2015. August 2015, and that's approximately around the 0.62 zone, 0.6190, something like that. So approximately around there, guys. In a way, you could initially just target the 0.62 zone because, like I said, this is near the low of August 2015, and that's how far this pair has gone already. So if we jump back into a daily chart, so as you can see today, this morning, it did fail to drive below this, below the 0.6250. Let's see if the bears have another go at it, especially if it struggles. Let's say if the pair struggles to push above its 0.6280 zone or this 21 EMA here shown as the yellow line in the 4-hour chart. If it struggles to do that, then we could see this one curving down and pushing to the downside here, potentially maybe even breaking the 0.6250. So keep your eyes on this one. And as I said, with the upside, well, we could start looking at the upside here around the 0.6310 zone. That's marked by the high of the 27th of September. But if if this could travel higher, it could travel towards the 0.6327 zone. It's just not far from this potential breakout point. But again, just for that extra confirmation, maybe we could consider this downside line here. But again, for now it's a very tentative one. You could keep an eye on it, just let's say in case, let's say the rate gets a hold up around here somewhere. But if it just ignores it, then aim for the 0.6362 zone. That could be a much better target, much better area of resistance, as it could also coincide here with the 200 EMA on the 4-hour chart. So that's why, guys, it's very important to keep an eye on this one, and a break above this level is for us a more important one in order to, let's say, consider higher levels in the near term. So keep your eyes on this one. USD CAD, I've talked about this one this morning, and during my trader's espresso, the pair was breaking the lower side of the range, and but as you can see, this is what I was telling you guys in this morning as well. Keep an eye on. We need to see a nice good close below this, because again, it flirted with the level, it overshot it, and it had a false breakout, and we couldn't even get a 4-hour candle closing below this. So in a way, for now, it's kind of traveling up again. All this territory between the 1.32 2930 zone and the 1.3310 area, all this kind of territory is going to be somewhat of a neutral one, because to be honest, it's a very tricky position here right now. So if we would get a nice good drop below the 1.3230, or at least a 4-hour candle close below this, then we could at least start considering lower levels like the 1.3208, or even going further down towards the 1.3172 zone. So For now, that's not the case. We're not getting our close. For now, you can see that the pair is trying to make its way back up here, but for us to consider higher levels, we need to see a push and ideally a close above the 1.3310 zone. And again, with the close, of course, we would like to see a daily close above that, but we'll start considering the upside if we see a 4-hour candle close above this, but we'll have a very tight stop loss in there just in case it suddenly reverses back to the downside. And the last pair for this session, I've also looked at it this morning, and that's euro dollar. So it traveled a little bit higher, but didn't quite reach this area. But this is what I was saying. So in a way, it might not even travel here all the way here. It might start reversing earlier. But if we see a drop below the 1.0924 zone, then yep, we will consider a possible slide towards the lows of last week near the 1.0904. So for now, it's working out nicely according to the analysis done this morning. It's drifting to the downside. It almost managed to reach its S2 today on the pivot point near the 1.0880, just fell shy of a few pips from reaching it. Don't get me wrong, we still have a full US session to go through, so might as well maybe we could see maybe this one drifting a little bit further down. But let's say if we suddenly get a strong reversal back to the upside and we see another, let's say, a daily close above the 1.0924 level, well, I mean, this could be signaling maybe a possible correction to the upside in the short run. And as I said, we could see maybe a move higher. We could see maybe a test of this medium-term downside resistance line taken from the high of June. But again, like I said, for now, we are more bearish than bullish. Yes, it is drifting lower right now. If it continues to drift lower, and let's say, for example, if it stays below the 1.0904 zone, somewhere around here, then the next potential target that we're going to consider, and let me just jump into a daily chart on this one. The next level is going to be around the 1.0839 zone, and to show you what that level was, and I've shown that on my video in my video this morning, and that's basically the low of the 11th of May 2017, guys. Here, so keep your eyes on this one. Again, for now, even looking at the daily chart here, you can see that the pair is sliding. But let's say if this suddenly, I don't know, a miracle happens and this one reverses back to the upside and closes a daily candle above the 1.0924 zone, well, I mean, this could be a nice kind of opening, or should I say maybe a trigger for a bit of correction here to the upside. So for now, keep your eyes on it. Let's see how this is going to play out today. So far, it is breaking below the 1.09 level. It's not far from that level, and let's see if it can continue. Let's see if the bears can continue pushing this one lower. For now, if we look at the pivot points, still have some room here to move towards the S2, which is around the 1.0880, but this could in a way provide some good support today. But again, let's not over speculate. For now, it is more bearish than bullish. But if this suddenly reverses back above the 1.0924, this could be a bit of a different story. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, in my traders espresso, that's 6 o'clock GMT time. For now, I hope you have a beautiful evening, guys, and I'll see you later. Thank you very much, and bye-bye.